Applied Materials is one of the most important companies in the global technology industry. The company builds machines and software used to manufacture semiconductor chips. These chips are inside phone, computers, data centers, artificial intelligence systems, and modern electronics worldwide. This means Applied Materials does not sell chips directly. Instead, it sells the equipment that allows other companies to produce them. Because of this, company is often seen as a key indicator of the health of a global semiconductor industry. During the past month, the stock moved with strong attention from investors following earnings results, industry growth expectations, and global policy news affecting semiconductor trade. The company released its fiscal year quarter results showing solid profitable and operational performance. Earnings come in above analyst expectations while revenue stayed slightly lower compared with the previous year period. Even with mixed revenue growth, the company maintained strong margins and cash generation, showing efficiency in operations and continued demand for advanced chip manufacturing equipment. The biggest confirmed driver behavior behind investors' interest is artificial intelligence infrastructure. The semiconductors are described by company leadership as the foundation of modern AI system. Demand for advanced chips and leading-edge manufacturing continues to expand as cloud computing and AI data center grows worldwide. Analysts expect semiconductor equipment spending to grow strongly through the coming years, supported by AI-related investments and expansions of chip factories globally. The recent analysis reviews shows most rating ranging from bullish to somewhat bullish, with higher long-term expectations compared with previous months. Several research firms highlighting expected growth in semiconductor system and continued investment cycles from major chips manufacturers. United States export restrictions affecting semiconductor technology shipments to China and expected to reduce company revenue in future periods. China represents a major market for semiconductor equipment makers. Competition from domestic Chinese equipment companies is also increasing according to analyst reports, which creates pressure in that region. There are confirmed structural risks investors continue to monitor closely. Recent regulatory filings show a company directors selling shares through a trust structure while maintaining ownership in the company. Insider transactions like these are publicly disclosed and watched by markets for transparency. When the global technology investments rise, especially in artificial intelligence and data infrastructure equipment, suppliers benefit early in the cycle. However, geopolitical policy, supply chain exposure, and global demand shifts can create volatility even when company performance remains strong. The very important things about is artificial intelligence expansion, semiconductor manufacturing growth, government technology policy changes. The last month shows investors balancing strong industry demand with real geopolitical and market risks. The semiconductor cycle, explained in simple words, is that why equipment companies move before chip companies, how institutional investors read earning reports. Ask yourself those questions.